Guys, to today's lessons, I'm so glad to have every one of us today. Okay, so before we get started, I would like to say, I would like to express my heartfelt gratitude to those who have subscribed to the channel so far. Okay, and I'm really, I'm grateful, and I want us to keep the subscriptions coming in so that we can get to 200 subscribers. Okay, so real quick, a student from this YouTube channel actually gave me the idea of on creating the Telegram channel. I promised us we are going to create a Telegram channel for this, for us. Okay, I actually did that, and we hosted a live session on the channel. So what I'm going to do, I'm going to attach the link of the Telegram channel to this particular video. Okay, so you may want to check the description box and and join the channel. Okay, so real quick, to make sure that we are all on the same page, we are just want to give us a time period to be expecting new videos on every week. Okay, so uh, our time factor of uploading new content weekly is on every weekend. Okay, so on every weekend you should be expecting new video from us. Okay, so because creating a content within the trading week and between trading and comes with a lot of stress. Okay, so the best time I'm free to do the content is on weekend. So I just want to us to be clear on this. Okay, so every weekend expect some new videos, some new contents from us. Okay, so thank you guys for subscribing, and if you haven't subscribed, please do well to subscribe. Okay, please do well to subscribe, turn on the notification bell to get notified. So in today's lecture, we are going to be talking about power of three. Okay, we are going to be talking about power of three and New York afternoon session opportunities. But actually, we are not going to cover the New York afternoon session opportunities because, like I said, I just take my trade on the London session and I'm done for the day. Okay, so we are going to talk about the power of three. Okay, so this is the Aussie dollar weekly time frame. Okay, so prior to this move happening, I talked about it in my previous videos. Okay, so we were here the last time. Okay, I was like, okay, this is the last week, and we traded off a rejection block, and the previous week consolidated. Okay, you can see that it was just consolidation throughout. Okay, so now I talked about this old high getting taken out and this fair value gap being reached for right now. So, and as you can see, this week uh this past week delivered it fully, and you can see that we traded off those fair value gap. Okay, so now this brought the question on, someone actually asked this question, okay, on social media. Okay, like once price reached for my anticipated level of my anticipated PD array. Okay, like in this example we have price prior to today, we talked about price reaching for this old high and uh probably this fair value gap. Okay, and as we can see right now, price has already reached for it. So the question was like, now that price have reached my anticipated level, what is the next thing to do? Okay, what is the next thing to do? That was the question the guy asked. Okay, so I was like, okay, and seeing what price action did this week, the previous week was this actually Sunday, we are actually on a new week. Okay, so seeing what price did, I was like, okay, once price, so I'm going to answer the question in this video. Although I answered the question for him, uh, I told him that once price reached for an opposing liquidity, in this example we have a premium array. Okay, we have a fair value gap in a within a premium market, within a premium sector of the market. So once price reach for a liquidity, we should expect it to reach for an opposing liquidity as well. In other words, price has already traded uh, into a premium spectrum of the whole price leg right here. Okay, so this is price trading into a premium market section. Okay, so we should expect it to reach for some kind of discount, because like we learned earlier, price moves between some level of premium to discount. Okay, so in this scenario now, we should be expecting, now that price has reacted off this fair value gap, we should expect it to reach for some kind of opposing liquidity. In other words, we expect it to reach down into some kind of discount market environment. Okay, so now that is how you uh, that is the best thing to do once price reach for your uh, anticipated level, be it discount or premium. Okay, in this case we have a premium market. uh, we have price reaching for a premium array. Okay, and as you can see, price just reacted off this fair value gap, so we should expect it to reach for some level of premium. Okay, so looking at this range, as you can see, the reason why I used the bodies of these candles and not the wick is because we have long wicks. Okay, this wick is very long. So so uh institutional viewing the institutional traders, like I ICT thought the other time, we normally look at the bodies of the candles. Okay, so I'm more like, this is too long for me, that's why I use the bodies of the candle. And as you can see right now, we are above the 50% level in the premium market. Okay, so we should expect this market to reach for an opposing liquidity, which is probably this old low. Okay, I'm just seeing this old low. Okay, taking a look, I'm seeing this as, because this is the first low below the 50% level. Okay, so and price has traded off a fair value gap right here. Okay, although we have a mini fair value gap here that has been filled. Okay, but I'm still anticipating some reach down to an opposing liquidity. Okay, so that is just that. So now our focus is going to be on the daily time frame. Now this is the daily time frame. Okay, and you can see on Monday sought to the can see on Monday trading into the fair value gap, weekly fair value gap rather. Okay, so this the previous week was kind of interesting. Okay, so and I have something to share with us. So talking about the power of three, which is for accumulation, manipulation, and distribution. Okay, so now this week actually made me to realize, come to an understanding of why the last week of March had to consolidate. Okay, so as you can see, we are still on the daily time frame. So you can see, as we see here, we have consolidation. So what this is actually a kind of live example on power of three. Okay, so we have the accumulation right here. So accumulation comes in a way of consolidation, because others were, as the market was consolidating, remember this is a daily time frame. Okay, so just imagine, the you can imagine the orders that were piling up on both sides of this consolidation. Okay, so we have the market moving sideways. So we have those that were selling the top, buying the bottom, selling the top. And as you can see, so this is just a classic uh power of three that we are seeing here on the daily time frame. Okay, so we have the accumulation, the manipulations, and right now we are in the distribution phase. Okay, so we are in the distribution phase. Price, you can see, and during the last week of March, price was just being accumulated. Okay, so we saw the accumulation phase in the early week of last in the and on Monday. Okay, actually on Monday we saw the manipulation. Okay, so there was a breakout to the upside, and traders went long here. So the idea has so the last week of March saw to it. Okay, this was accumulation, manipulation, and we are now in the distribution phase. Okay, So going down further, breaking this down further, you can see we have very long wicks. Okay, in situation like this, when you have long wicks, ensure to use the body of the candles and not the wick, because the wick are like kind of manipulation. Okay, so we take our measurement from the bodies. So as you can see, looking at this trading range, this is the accumulation, which is the consolidation, manipulation, and the expansion. And this is price already reached for a premium spectrum from the weekly, which is the weekly fair value gap. So we should be expecting the distribution phase to reach for some kind of an opposite liquidity, and below the 50% level we are having this fair value gap here. Okay, so price has just broken the structure. This is a classic swing point on classic swing point actually. Okay, so we have two types of swing points when the market is about to turn around. We have a kind of stomp hunt on liquidity and a failure swing. Okay, what I'm actually going to do, I'm going to make another video explaining what swing points are, swing points in the marketplace, and and their importance. Okay, so now as you can see, this is the classic power of three. Okay, this is the classic power of three on a daily time frame. Okay, this is huge kind of movement. Okay, so now we should be anticipating this week. We are already bearish on the daily time frame, although the weekly time frame is still very bullish, but we are already bearish on the daily time frame. And price, as we know, is always reaching for one of two things: liquidity or imbalance. Okay, and we are still in the premium sector, so we should be looking for sales. We should be our bias is very should be bearish. Okay, looking for sell below the into the discount market sector. Okay, so now this is going to be my focus on this new week. Okay, I want to see price reach for this fair value gap. Okay, probably maybe it might reverse from here or reach for this old low. Okay, depending on price. We don't force price to do anything. Okay, even when you have your bias like this week, I was having a bullish bias this week, so this move caught me unawares. Okay, I was like I wasn't really expecting this whole move. Like, it was huge, guys. It was huge, and I had to be flexible. Otherwise this would have hurt a lot. Okay, so in other words, I'm expecting this week to reach for this fair value gap. Okay, so now this is the 1 hour time frame. Okay, so and this is the classic ICT power of three. Okay, as you can see on the 1 hour time frame, we had a very huge consolidation. Okay, so we have others piling in the marketplace. Okay, and this was the accumulation phase, the manipulation, trading into the weekly fair value gap, and the distribution phase. Okay, so we are currently still distributing. Okay, we are still in the distribution phase of it. Okay, so we should be expecting some move below the equilibrium. Okay, so we can see some gaps here and there. Okay, so that is just how it is. Okay, so now going properly into today's business. Okay, so now we have, this is on Tuesday's transaction. Okay, we have this day's price action. Okay, so as we all know, these are the time of the day we start hunting for our setups. Okay, so we have the New York 12 midnight, we have the 2 a.m. London session opening to 5, and we have the 7 to 12 noon. Okay, so it's actually 7 to 10 for the New York morning session. Okay, but I just like to see mine to 12. Okay, all right, so these are the time of the day we take note of. Okay, now we have the 12 to 1 New York lunch hour, then for our New York session afternoon trades. Okay, so now, so the classic uh power of three for bearishness. Okay, this is for bearishness. We have, for bearish days, we have the opening price, we have the manipulations which will form the high of the day, then we have the distribution and probably the close. Okay, the distribution which will form the low of the day and the close of the candles. Okay, so now this is for bearish days and this is for bullish days. So for bullish days, we have our opening price, we have the manipulations, which will form the law of the day, and we have the distribution and probably the close of the day. So for our bearish days, our opening price is, our high probability setup is buying a selling above the opening price. Okay, so our probability setup will be to sell above the opening price. So we hope to get in on the move during the manipulation. Okay, so when traders are chasing this buy up, that is what we'll be looking, positioning ourselves to sell, so that we'll get our high probability setup above the opening price. Then for bullish days, we get our high probability setup below the opening price. Okay, so now applying this little diagram right here to the live chart. Okay, so before now, I don't know, many of you of us might know the power of 3 can be applied to a whole daily range, or you can it can also be applied to the session per session. Okay, to a session. Okay, in other words, what I mean is that uh, we can frame our trade. In this case, we have uh, we have a run up here. Okay, so probably this is the 12 o'clock midnight. Okay, this is 12 o'clock midnight. In other words, we can anticipate, if we are looking for buys, if we are looking to go long right here, we can anticipate our entry below below this opening price, or we can as well anticipate our entry below the opening price on the London session, and we can also anticipate our entry below the opening price on the New York session opening. Okay, in other words, the opening price of each session can also be used for as a high probability setup. In other words, you can view this as the open, the expansion lower, which is the manipulation, distribution, and the closing of the day. So we can view this. So looking in this scenario, we have the fair value gap being reached. Okay, so if we are looking to go long after the London session opening, our high probability setup would be below the opening price, which is the candle that opened up the 2 a.m. London 2 a.m. New York time. Okay, so our high probability setup will be to look for long. That's to see an old low be taken out. Look for longs. Looks for the movement below the opening price of the below the opening price of the London session opening. Okay, and that same thing goes for the New York session. Okay, so if we are looking for to go long, we look to buy below the opening price of the New York session opening. Okay, in other words, the same way we frame the power of 3 on the opening price of the New York session 12 o'clock midnight, we can as well frame same setup on the opening price of each session. Okay, so if we are looking to go long, our high probability setup would be to buy below the opening price of the London session 2 a.m. New York time, and same thing we go here. Okay, so now this is price trading into that fair value gap. This is price trading into that weekly fair value gap. Okay, so let us see how this goes. Okay, now this is the 2 a.m. 2 a.m. New York time London session opening. So this is our opening price. Okay, as you can see, price traded above the opening price. Okay, so and price was just respecting this. This is an engineered liquidity. This is liquidity be engineered right here, because this highs is very very clean. Okay, this high is very very clean, and as you can see, we traded below an old low above the opening price. Okay, so price grabbed liquidity, and this high seemed very clean. So this was where I got my first setup. Okay, this is 5 a.m. London time. Okay, this is New York time, sorry. This is okay. So you might ask what were the factors surrounding the idea of this setup. Okay, so basically I'm just going to share the reasons, some of the factors I considered on taking this long short scalp entry, because now we have these clean highs. Okay, first and foremost, these highs were too clean. Okay, we are just way too clean, and my original bias, remember, is still very much bullish. Okay, so now, and we have a break of structure right here. Okay, we have a break of structure. We have this old short term high, break of structure to the upside. Okay, now, and you pay much closer attention here, you will notice that we have a fair value gap right here. Okay, so this was price trading back into this fair value gap. Okay, we have this fair value gap being traded into, and at the same time an old low be taken out. Okay, so probably those that went long here have their stop loss trade below here. Okay, so this was a run on sell side liquidity, and at the same time we traded close or near the opening price. Okay, and at the same time traded into this other block. Okay, these two consecutive down closed candles before this old move. Okay, so these were the factors combining together that give me the confidence on going long here. Okay, because my primary bias was still very bullish. Okay, so I was just looking for a short scalp above the these clean highs. Okay, so as you can see, I got my entry right there. Then one thing I want to point out is that in a situation like this, uh, when we have a huge move like this from the opening price, this is where we what the next thing to do is to create our setup around the opening price of each session. Okay, so remember our bias was bullish prior to this. Okay, and so our high probability setup would have been looking at this old lows being taken out. Okay, but coming up to our chart, we can see this, we saw this huge move. So what how then do we frame our setup? That is where the opening price of each sessions come in. Okay, then we have to apply the concept of power of three using the opening price of each session. Okay, so when I mentioned earlier that I wasn't really expecting the down move, what I meant was that uh prior to this fair value gap being reached for, okay, I was expecting some kind of consolidation. Okay, I knew that this fair value gap being reached for, I was anticipating the opposing liquidity. In other words, I was anticipating a reach for an opposing liquidity. Okay, but before that, I was kind of really hoping for a consolidation. Okay, a redistribution. Okay, in other words, if we are looking to go long, that is accumulation. Okay, then if we are looking to go short, that is distribution. Okay, so I was hoping for some kind of consolidation on the daily time frame in a way of distribution. Okay, before price will eventually drop down. Okay, but that then it occurred to me that that is what occurred right here. Okay, so we have this distribution here. Okay, so smart money we are distributing their long, we are offloading their long position right here. Okay, so which explain the clean highs. Okay, and I saw a classic swing point being formed. Okay, so we have this old low and old high, uh, a run on buy side liquidity and a run on run on sell side liquidity and a run on buy side liquidity. So this was a classic swing point. Okay, so this was a classic swing point, and I will make a video explaining that. Okay, so that's the confluence, coming putting all these factors together. Okay, was actually what led me to this setup. Okay, so I had fair value gap right here, a break in structure to the upside. My bias was bullish and old low being traded into prior to the New York opening price, okay. So and at the same time close to the London session opening price, okay. So remember our probability setup, our high probability setup is to buy below or near the opening price, okay. So let's see where we got in. So this is that clean highs, right, and we have the drop on sell side liquidity. Then we have markets trade up, we have our short term hold high right here, okay, but there was no shift in structure. Markets, sorry, there was no shift in structure, okay. So but then uh what actually gave me my entry was there was displacement right here, okay. You can see the fair value gap. This is displacement, right? This is displacement, and you can see price was just, offering only buy side liquidity and at the same time creating a fair value gap right here, okay. So this was what I actually entered on a market order, okay, and aim for this clean highs. As you can see, got my entry right there, okay. So now the next one I got here was we have the opening price. This was kind of okay. So seeing these old highs being taken out, and at the same time we are trading above the opening price, okay. We are trading above the New York opening price. So this was the manipulation move, okay. So this was the accumulation, the manipulation. So I was expecting the distribution phase, right? I was expecting the distribution phase. So our high probability sell scenario is probably above the opening price, okay. So that was how I framed this entry, okay. I framed this setup on that, okay. Frame this setup on that because this is a classic swing point, okay. We have two type of swing points. We have the one that run on liquidity and a failure swing, okay. So I'll make a separate video explaining the concept of swing points. So with the factors joined together, this is distribution, okay. We have this is distribution. Smart money offloaded their long to go short, okay. Probably there are buy stops resting above here, okay. We have buy stop resting above here. So those that have their buy stop resting above here will have their stop loss below here or here, okay. So price ran on buy side liquidity and dropped off heavily, okay. So now this is the clean highs and we have the run on buy side liquidity. As you can see, the movement was swift, okay. Movement was swift, and we have the break of structure right here, okay. So got our fair value gap and probably got in right on this, okay. I normally use my these candles week. Once it trade above these candles week, that's where I got my entry and my stop loss. In this scenario I didn't use this short term high, okay, because this is huge. So what I actually did was to use this candles high, okay, candles high. This is because with this up candle before the down move, this up candle right here, this set of up candle before this down move, this is a mitigation block, okay. So my stop loss was probably above here because at the same time having this fair value gap, we also have this mitigation block right here. So price traded into the fair value gap and went took off, okay. So I was looking at this fair value gap on the 3-minute chart, okay. This is the 3-minute chart. I actually got my entry on the 3-minute chart, okay. So I was looking at the fair value gap, okay. The low end of the fair value gap was what I used for my TP, okay. So now what is the takeaway from this lesson? What is the takeaway from this? So in examples, when we are going to be some times when price will move swiftly away from the opening price on the 12 a.m. New York midnight, okay. The opening price on the midnight, on New York midnight, there's going to be sometimes, a lot of times, price is going to trade away very fast. As we can see here, price moved away fast, swiftly, okay. So price moved swiftly away from the opening price, okay. And our bias was bullish, and but we had a quick move away from the opening price. And remember, when we are bullish, our high probability setup is close to the opening price or below it, which is we hope to cash our move on the manipulation, okay, because this is the perfect example. This is the example of a bullish day. Okay, we have the opening price, we have the manipulation. So this is where we look to get in on the manipulation or close to the opening price. Okay, for to go long. And when we are looking for short, the opening price, this is where we look to go for our shorts entries. Okay, our high probability setup to go down. Okay, so in this example, we are still very much bullish. Okay, and I was expecting some move below these clean lows. Okay, I was expecting some move below these clean lows, but unfortunately we got, or is it fortunately, I don't know, but the market, being the market, did what it has to do. Okay, there was this displacement, huge displacement prior to London session opening. So prior to London session opening, uh, what was the, then how were we able, how are we going to apply the concept of power of three now? Okay, so the best thing we do is, we take out the opening price on the London session opening. Okay, so the power of three is not just limited to the 12 midnight. Okay, you can as well uh, you can frame the setup around the opening price on the London session opening and the opening price on the New York session opening, just as we can see here. Okay, so this was how the week on Tuesday played out, and it was really, I wouldn't have been able to cut this move because but what happened was that I actually have to give room to myself to be flexible. Okay, so if I'm having a directional bias that is bullish, also bearing in mind expecting some counter trend move to that bias. Okay, in other words, if I'm expecting bullishness, um at the same time I'm expecting some kind of move, some kind of counter trend movement against that bias. Okay, so this was what actually one of the factors that actually led to me getting in on this sell entry. Okay, and the factors, the confluence that came together were kind of much. Okay, we have already traded into a fair value gap, a premium array. So I was expecting price to move to reach one opposing array. Okay, but before then I was expecting some kind of, some kind of consolidation. Okay, some kind of consolidation, and on the daily time frame, actually on the daily time frame I was expecting some kind of consolidation, but actually what the market did was create that consolidation on the 15-minute chart. Okay, as you can see, we consolidated here, dropped down, send buyers the wrong way, and and traded off. Okay, so that's just the concept of today's teaching. I hope we have found this useful, and I'm going to uh, talk about the swing point. Okay, and I'm going to hope we will be able to talk more on power of three. Okay, we hope we're able to talk more on power of three. So until next time.